Welcome to the Filogy Finance tutorial series. In this part, we are dealing with the financial reports again, but this time from the perspective of selling. You've already had purchases and sales. Let's look at their financial results. You may have many questions. How much was your sales revenue and sales cost? What do you have, and what is the value of it? How much cash you have? How much is your profit? In this part of the tutorial series, we are answering these questions by using Filogy financial indicators, graphical reports, and tabular financial reports. Summarize what has happened so far. You had a $1,000 investment. Then you bought 5 bikes. The average purchase price was $140. Then you sold 2 bikes of these 5, one at normal, the other at a discounted price. The WordPress dashboard instantly shows you the most important information. You can click on any of these for more details. Let's look at an example. I'm clicking on the revenue. You can see that you have $224 revenue and $280 cost in this month, so it looks like you have a loss. The graph shows the daily values. But go back to the previous month. You can see that you had $249 revenue because you issued an invoice at that time, but you have no any cost. So, looking at the 2 months together, including the last month's revenue, you've got a pretty good profit. Let's have a look at the listed reports. To do this, you need the Filogy Reports plugin. Under the Filogy Reports menu, select the required report. This time I choose the Accounting Entries report. This is the most commonly used report that lists the entries of any account you choose. Now I choose the cash account. You can see all the cash payments here. At what time, who paid what amount to whom. But how do you know that your cash amount has increased or decreased? This depends on whether the amount is in the debit or the credit column. You do not have to understand what the debit and credit words mean, this is not important. You need to know where the account is located in the balance sheet. The numbers on the edge of the balance sheet show an increase, while the numbers in the middle show a decrease. So, an asset account, such as cash, will increase if the number is on the left side, that is, in the debit column. For a liability or equities account, the increase is on the right side, that is, in the credit column. Revenues and expenses are on the profit and loss report. These are subcategories of equity. Because of this, they behave the same way as the equity on the right side of the balance sheet. So the numbers in the credit column on the right side show an increase. Again, in the case of the assets, the debit side means increase, and the credit side means decrease for you. Conversely, in the case of other non-asset accounts, the debit is the decrease, and the credit is the increase. Let's go back to the cash transaction list. In the first line, you can see $1,000 cash movement. Do you think your cash is increased or decreased? If you say that this is increased, you're right. Cash is part of the asset category, and for assets the debit means an increase. So your cash is increased by $1,000. This was your $1,000 investment. Then there are 2 lines where cash has decreased. These were when you got the goods for cash. Then there is another line of growth. You got that money for a bicycle sale. Let's look at another account. We have many options. I now choose the inventory account. Press the Run Report button. The inventory account is also an asset account, so the debit side shows growth. You can see that the inventory value increased by $100, then $600. These were the 2 items when you bought the goods from the vendor. Then there are 2 lines where the inventory value had fallen. That was the 2 sales. In sum, the inventory rose to $700 and then dropped by $280 over the period. The following example is the sales revenue account. Select it and press the Run Report button. Maybe you remember, the sales revenue account is a subcategory of equity account, so this is not an asset account. Thus, growth is shown on the credit side, unlike the previous accounts we've seen. You can see that sales revenue grew by $249, then $224. Growth is now on the right side, in the credit column. This is the revenue from the 2 bikes sold. Please note that the sale revenue is $249 and $224, which information will soon be important. Your total revenue is $473. The next, and I promise the last account we look at will be the cost of sold goods account. Select it and press the Run Report button. Is the increase of the cost going to the debit or credit side? Cost is also a subcategory of equity. The rising cost reduces the equity that is shown on the debit side. The cost is generated when the product comes out of the inventory. This is the cost of the 2 bicycles being delivered to the buyer. Notice that this is not the selling price but the cost. Previously you could see that your sales revenue was $249 and $224. Now you can see that the cost is only $140 twice. The difference between the revenue and the cost is the profit. Another report is available to show this. We have looked at the account entries report so far, and list entries of several selected accounts, thus many financial parts of your WooCommerce web store. You don't have to run complex tables manually. Filogy automatically carries out a large part of the administration, and you can retrieve any financial data easily using, for example, this account entries report. Let's go to the balance sheet. The balance sheet is showing your assets relative to your liabilities and equities at a given time. You can specify the required balance date, how much the report needs to be detailed, so select what level of accounts should be shown, and define whether to show every line or only those lines that have value. After entering the parameters, press the Run Report button. You've seen it in an earlier episode, but let's repeat what's on the balance sheet. The balance sheet has 2 sides. The left side shows what you have, the right side shows what is the source of it. The source can be a creditor or an owner. The left side is called assets. It can be, for example, cash, receivables, products in stock, or an equipment of the business. The creditor part of the right side is called liabilities. It is the debt that your business owes someone. It can be, for example, a bank loan or an unpaid invoice. The owner part is called equity. It is the wealth of the owners in the business. Equity can be an investment of an owner or profit that the owner leaves in the business. The totals on both sides must always be the same. Go back to the balance sheet report in Filogy. The 2 sides of the balance sheet are under one another. You can see that the values of the 2 parts are equal. The total amount of the upper assets section and the combined total amount of the lower liability and equity section are equally $1,193. Let's see what you have at the given time. This is in the asset section. At the given time you have a total of $773 cash, including $524 cash in hand and $249 in your bank account. The amount of account receivables is 0, so you don't have any customer who owes you. The inventory value is $420. So, the total value of the assets is $1,193. The liability amount is 0, so you have no debt to anyone. Within this, the account payable is 0, so there is no unpaid invoice. The equity section consists of 2 items, the $1,000 investment and the current year earnings, which is the $193 profit this year. From the liabilities and equity sections you can find out from what source you have taken the above assets. You need exactly as much sources as your assets are worth. That is why the value of assets is equal to the value of the liabilities plus equities. So, the value of your cash and inventory is the same as your investment plus the value of the profit you have made so far, because this is the source of your assets. You can click on any blue, bottom-level account to see where the amount comes from. This is the so-called drill-down function. Check out where $420 inventory is coming from by clicking on the blue link in the given line. With one single click, you get the well-known account entries report with the detailed inventory numbers. The total amount of this detailed report is $420. This is exactly the value you are looking for, and above there are the details of it. Now you know where this amount comes from. I'd like to show another line, the current year earnings. This is your annual profit, which depends on this year's revenue and costs. Click this link. The profit and loss report is displayed. You can see your this year revenues and expenses. The report shows you had $473 revenue and $280 cost, with a difference of $193. This is the current year earnings. Let's go back to the balance sheet. Here's the $193 current year earnings value. If you made a profit in the previous year that the owner didn't take out of the company, then a similar retained earnings line would appear here. The next item is the profit and loss report. Click on this menu. As you've just seen, the profit and loss report shows revenue, sales of cost and other expenses over a period of time. You can specify the time period, how detailed the report should be, so what level of accounts should appear on it. Do you want to see blank lines or not? After you've set everything, press the Run Report button. The profit and loss report is displayed. You already know this report, since you just saw it when you drilled down into the current year earnings data on the balance sheet. So you see the same report as before. The following is the cash flow statement. Select it from the menu. Cash flow statement shows the flow of cash in and out of your web store in a given period. You can enter the same parameters as in the previous report, such as the time period. Press the Run Report button. The cash flow statement is displayed. There are three major groups: cash flow from operating, financing, and investing activities. By default, only the first two are used in Filogy, but if you want, the third one can also be set. Operating cash flow includes cash movements related to day-to-day operations, such as sales revenue or payment of purchased inventory goods. Financing cash flow includes other financial cash movements, such as owner's equity. Cash flow statement shows how much money you have at the beginning of the interval. You did not have any money at all. You can also see the generated and spent cash in the time period. You had $193 net income, which is the difference between revenue and costs, and spent $420 for inventory. In addition, there was $1,000 increase in equity in financial cash flow. You can see that your money increased by $773 in the month. So after your initial $0, you currently have $773 cash at the end of the interval. The following report shows the account of a selected partner. Choose Partner Account Entries menu. Select a partner. Enter a time interval if you wish. Press the Run Report button. In the list, you can see all the entries of the partner in chronological order. An invoice was issued on February 28th. The payable amount of the customer is $249. It was paid on March 5th, so his balance is finally $0. The following is the inventory report. Select this menu. You can choose from a list which product you want to report. You can also search for product name or SKU. After entering the parameters, press the Run Report button. There is only a bicycle in stock. The stock quantity is 3. There is no committed amount, so this product is not currently in a shopping cart of a customer. There is no ordered quantity, no merchandise ordered from the supplier that has not yet arrived. The total stock value is $420. The next and the last report is the Inventory Audit Report. Select this option. You can choose a specific product or leave it blank if you want to list all the products. The report includes stock items movements in chronological order. There are two main groups of columns. The one contains the movements that show the change of values in the rows. The following column group shows the resulted state. In an earlier episode, we've already looked at inventory lines for purchasing products from a vendor. Now we just look at sales. On February 27th, one bicycle was put into a shopping cart. The committed quantity movement is 1, the total committed amount is increased from 0 to 1. On March 7th, this item was purchased and left out of the warehouse. The in-stock quantity decreased by 1, so the total in-stock quantity changed from 5 to 4. The transaction value is $140. This is not the selling price but the purchase price. The total inventory value of bicycle fell from $700 to $560 on March 7th. The committed value was terminated, now it is 0. There was another sale transaction with commit and delivery, with the same data as in the previous lines. Finally, the in-stock quantity has changed to 3, the inventory value has changed to $420. In this part, you've seen the results of the sales you made in the previous episodes. Financial indicators and charts provided online financial information about the business. You have noticed that it is not necessary to keep your data in complicated spreadsheets. Filogy automatically performs most of the business administration and provides data to generate reports. In this episode, we could easily query these financial data in a well-organized way. Financial indicators and charts have provided online financial information about your store. With Filogy reports, you get detailed reports about your business, such as balance sheet, profit and loss statement, or cash flow statement. You have reviewed the inventory using Inventory Report and Inventory Audit Report. This time we looked at them from a sales point of view. Filogy reports give you a better picture of your company. In the next episode, you will look at reverse and cancellation transactions, like the goods return and credit memo. Thank you for watching this video, and don't forget to subscribe to our YouTube channel.